Good day, everyone. This is Jack from the Stock Serpent Watchdog, and we received a request to do an analysis on General Electric. Yeah, General Electric, the age-old company conglomerate that has been around for ages. Let's have a look here at the daily chart. On the daily, let's start with our process. Our process is a 10-point process. It's a checklist that we run through to make sure that this is investable or not. Let's start at number 1. And the first point on our checklist is the price greater than the Kumo. The Kumo cloud is way up here. Price is trading down here on the daily, and that would make it a negative. I'm going to just number that 1. The red circles indicate bearish items on our checklist. Yellow is neutral and blue is bullish. So let's look at the second item. Price greater than the Kumo shadow. Where is the Kumo shadow? Oh my goodness, it is not even here on the chart. So the Kumo shadow is the Kumo cloud trading behind price, and there is nothing on this 6-month chart. So that is definitely bearish. There's the last bit of Kumo shadow, and that is negative because there is nothing in sight here. Then on the third item is the Tenkan-sen, which is the fast-moving average, greater than the Kijun-sen. It is not, so that means that this market is falling. The moving averages is moving faster than the medium-term moving averages, and that is negative as well. On the fourth item is price very near or at the Kijun-sen. Now, the reason this is an item on my checklist is because price gets drawn to the Kijun-sen because it is a medium-term midpoint moving average, and over time, price should move toward it. But right now, it is in free fall. It looks like it's consolidating a little bit over here, but it is far, far away from the Kijun-sen. So for that reason, there could be a move back up to the Kijun-sen, but it is highly speculative. However, that does get a bullish check on our checklist. Then the fifth item on our checklist is the Kijun-sen and the Tenkan-sen greater than the Kumo. Well, these moving averages are in a bearish alignment under the Kumo, and that means it's another check for the bearish side of the argument. Looking at only the midpoint, the fast midpoint moving average, the Tenkan-sen, is it pointing up? It is not. In fact, it has moved a little bit to the side here. So that's going to put it into neutral territory right now. So we've got our first neutral indicator. It looks like consolidation might be taking place here. It's not bullish. It's not bearish. It is just moving sideways. Then looking at the same kind of thing for the Kijun-sen, is the Kijun-sen moving up or down? It is pointing straight down. That is negative right there. So this longer term or intermediate term midpoint moving average is pointing down. That means momentum is down, and that's going to be a lot of selling pressure on price right here. Then getting into our Chicago span, look at this. The Chicago span has broken away from price. It was under the cloud all the way from up here, and then it consolidated sideways. Look at these interactions with price. When the Chicago span interacts with price, it means that things are choppy and volatile, and that's exactly what we got here. As soon as the Chicago span started interacting with price, look at these movements. There's movement up into the cloud, back down, up into the cloud, back down. Price interaction again with the Chicago span and moving back up into the cloud and being rejected, moving back down. It's just a choppy, volatile mess until this point here where the Chicago span finally breaks away, breaks out of the price consolidation and moves straight down. So this is also where the trend picks up, and this is what the Chicago span tells us. It tells us when a stock is ready to trend, when it has the potential to trend. All right, so right there, the potential would be here. The Chicago span is under price, far, far below price, and that is another negative check on our checklist. Then the ninth item on our checklist, the Chikkal span greater than the Kumo. This is the Kumo up here. Where's the Chikkal span? It's way down here. That's another negative check on our checklist. And finally, what does the future look like here for the Chikkal span? Horizontally, you can see that it's going to take a good while, maybe a month before it interacts with price. From this point here to this point here, it's roughly a month, month and a half before it interacts with price. So it can move sideways and consolidate, or it can continue down, or it can move up. Now, if it moves up, it's going to be about a month before it starts interacting with price over here. Now, that's not going to be an easy thing for price to do, but there is a possibility that it can just continue falling here into open space. All right, so there is a lot of open space. I'm going to put this in the neutral category because there is a lot of vertical space to move in. There's a lot of horizontal space to move in, and there's a lot of negative vertical space as well, which is not on the chart here, which we'll have a look at on the weekly. All right, so just looking at this, let's have a look. We have two neutral indicators, one bullish indicator, and about seven, that's right, 7 bearish indicators on the daily chart. Now, with that said, let's move on to the weekly chart. All right, this is the weekly. There we are. Now, the weekly starts in 2016, and here we can have a very good look at exactly what is going on and where things really started going haywire for General Electric. Now, look at this. This is where price moved through the Kumo cloud on a weekly basis. Now, this is a long time ago. This is 2017. Look at that. In 2017, price moved through the cloud, and once it broke through, it could not get back above the cloud. It was prevented by the Senko Span B, which is the slowest moving indicator in this Ichimoku Kinko system. That means that it is very, very strong support or resistance, and in this case, it was strong resistance. Price could not get back above the cloud, and we started to plummet. So let's just do the first 5 items on our checklist to see what it looks like on a weekly chart. And is price below the Kumo? It is below the Kumo, and I want to give that a -1, a bearish 1, a red circle. Is price above the Kumo shadows? Now, where are the Kumo shadows? Look at that, ladies and gentlemen. There is literally no support here from 2016. This price has collapsed. There is no indication of any Kumo shadow, which is usually support and resistance. Now look at this. This is the Kumo shadow. This should have been very, very strong support. This should have been support because it's a flat area of the Senko Span. It should have been support. Look at that. It literally took 5 weeks to get through this. So something is terribly, terribly wrong in this company, and it has just plummeted for more than a year. Moving on to our... oh, that should be red. Let me just get that the right color. Just ignore that one over there. We got a red 1 here. Prices under the Kumo. Here, there is no support by the Kumo shadow. And the third item is the Tenkan-sen greater than the Kijun-sen. This Tenkan-sen, the fast-moving average, has been falling and falling and falling ever since we moved below the cloud. It has not even made an attempt to cross over the midpoint, the medium-term midpoint moving average. So it is still pointing down as well. That makes it very, very bearish indeed, and there's a lot of selling pressure coming here. Then the fourth item is price close to or near or at the Cajun Sin. The Cajun Sin is this red line, and it's trading at 11.50 while price is about at $8. Now that is not even close. There is a massive gap between those two items. So again, why is that bullish? That is bullish because price, look at this. Look at what happens here. So price does tend to consolidate and move back up to this red line, which is the midpoint moving average, the medium-term midpoint moving average, I should say. Price actually interacted with that medium-term midpoint moving average, and then it continued its decline. So that might happen again in the near future, but that is highly speculative considering that this is very, very bearish. This chart is very, very bearish. The next item on our checklist is the Tenkan-sen and the Cajun-sen above the Kumo. Well, this is the Kumo, and look at this thick cloud over here. That's going to be very difficult to get through. So even if price moves up here, it's going to be hitting the bottom edge of the Kumo cloud. That should be enough resistance to push it back down. So if it trades up here to the Cajun-sen, it's going to find resistance. Then it's going to find resistance again here. And both of these midpoint moving averages have been under the Kumo ever since price moved below the Kumo. So horribly negative. Nothing positive I can say about that. All right, that's the first 5. Let's just quickly look at the Chicago Spun. The Chicago Spun broke out here. If you have a look there, it broke out there. And it's been moving down ever since. It's trading below price. That means that right now it is very, very negative as well. And there doesn't seem to be any support for price at this point in time. Then let's just have a look at what the future holds for the weekly Chicago Spun on General Electric. There's a lot of vertical space here, open space, so the Chicago can actually move up to about 1180, even into the 12 area. So that is a little bit of a reprieve maybe for GE. If price continues to move down, then the Chicago Spun will move down. But if it consolidates here, it's going to be running into price in about 26 weeks, which is roughly half a year. So it's going to be about half a year, 6 months before the Chicago Spun runs into price and consolidates even further. Otherwise, if it trades up over the next 6 months, it can trade up to about $12, which is roughly a 50% move. So there's a chance that that might happen. It is highly speculative. Because this is a falling knife, I would be avoiding this like the plague. Now, one quick look at the monthly chart just to close out this analysis. All right, let's look at the monthly chart. And on the monthlies, it is obvious that this chart is hyper bearish. In 2009, it traded up. You remember that there were signs of possible bankruptcy. It traded at about $4.20. It traded all the way up to about $30, which is a great return. And then it just turned very, very bearish right here in 2017, start of 2017. And we started moving down. Look at the crossover here of the fast midpoint moving average over the medium term midpoint moving average, and price has not looked back. It has just fallen and fallen. There is no support here. That is one thing I want to point out. If I have a look at my Kumo shadows, this was one area where the Kumo shadow should have supported price. It did not. Now, usually the Kumo shadow is the Senkou Span B, which is the slowest moving indicator in this trading system, the Ichimoku Kinko Heiyo trading system. It should have caused at least some kind of price consolidation, but it actually just moved straight through. That is very negative. And then there are no more flat areas for it to consolidate against. Now, yeah, there is literally nothing here. Well, I'm looking and there is no support here. Right now we are trading right there. And as you can see, there is nothing below here to serve as some kind of support for price. Nothing to support price. There is nothing at all. And I would be staying clear of GE until at least we have some kind of indication on a daily chart that we are moving above the cloud. Because clearly we are below the cloud, and that this is still a falling knife, and you do not want to be catching that because you will get cut up in the volatility. It is choppy as hell. If you've ever been a surfer, if you surf the choppy waves, you get cut up on the rocks if you do not respect it. Respect the volatility and stay out of this sea. All right, ladies and gentlemen, this was an analysis on GE by the Stock Serpent Watchdog. My name is Jack. Please subscribe to my channel. It's a new channel that is there to help you guys watch out for pitfalls and to watch out for stock pundits on YouTube and on the Main Street media who are punting their stocks and their stock picks. So please be careful. Go out there. Safe trading and a good day to you all.